The broadcast is now starting. All attendees are in listen-only mode.
I'm back, fellas. I am back. Hang on one second, guys. Today we're going to go over just a very simple, basic kind of methodology of how I trade or how we look at order flow and how we trade order flow. All right. This could be a fairly quick lesson, but we're building on, what we have done over the last couple of weeks. We'll continue to build incrementally. When we had our first lesson, and I basically went over the order flow. I'm going to show it to you on a naked chart first. We talked about areas such as VWAP, 68% area of daily distribution, etc. So it's easier to see if we look at it on this chart, okay? There are essentially 6 areas that we trade around, okay? The order flow represents these as, on the order flow now, VWAP, okay? And then top and bottom, we have our 68% area of daily distribution. Yes, that is a Fibonacci number. And I'll explain that. And then we have 95% of daily distribution. For those of you guys that don't understand that, or what daily distribution is, okay? Distribution is where price has been on the daily basis. So for instance, if daily distribution has been from 1 penny to $1.01, that is your entire daily distribution, which starts at 6 p.m. Eastern Standard Time. I don't care where you live in the world. I don't care what state you live in, what time frame you live in, or time zone you live in. The world operates on Eastern Standard Time. Okay, so for purposes of my education, your order flow should all be reflective of Eastern Standard Time relative to where you live, right? So if you're Central Time or Pacific Time or Australia, whatever the case may be, it is still reflective of Eastern Standard Time, okay? Not your current local time. In any event, daily distribution is merely where price has been throughout the entire day. Volume-weighted average price is, as it implies, the average price weighted for volume. So let's just use easy numbers. If price has gone from a penny to $1.01, you have $1 worth of daily distribution. VWAP for easy numbers would be $1.50. Let's just use simplistic numbers. Okay? 68% of daily distribution would be 68% up and down of your daily distribution. Okay? That's all it is. So what we're looking at right here, guys, are effectively area number 1, 2, and 3. And then 95% of daily distribution, top and bottom, would be 4 and 5. There's one last point that we look at in the what I'm trying to find is the volume point of control, which on the NASDAQ, I guess, is going to be a mile higher. Let me show it to you on gold. That'll be easier. That's your volume point of control. The volume point of control is representative of the single print, the single tick, the one single tick in the entire day's range where the most amount of contracts traded. Those are the 6 areas that we are interested in. We are always trading to somewhere from somewhere. Okay? So for instance, here in gold, we are breaking through the 68% area of daily distribution. Okay? The 95% happens to be at the day high, but that would be our target. So we're always trading to somewhere from somewhere. In this instance, if you'll notice here, we traded from the 68% level down into VWAP. When we bounce on VWAP, we expect a move back up, wrong one, back up into the 68%. I can't, guys, with this crosshair, I'm trying to get rid of this. So there we go. So we expect a move back into 68%. That's the expected bounce. And here we get it. Okay. That would be a target 1. We're trading above the point of control, above VWAP. Point of control can be anywhere anyways in the profile. Doesn't really matter. But we expect to trade above VWAP back into our 68% area of daily distribution. From there, we expect now to trade up into here. Now, that's the expectation. It doesn't always work that way. Okay? Meaning, we may get to the 68% and a failure, but that's why we identify targets. Okay? So those are the 6 areas, really 5 primary areas that we're trading to and from. So here are our expectations using order flow. Let's go back in the session. Let's go to 9:30 when the market's open. Okay. Here is 8:30. One of the things that we consider these 95 areas of daily distribution to be overbought on the top and oversold on the bottom. Overbought, oversold. When we reach these areas, we generally can expect a bounce back up at least to the 68 from the downside. And if we are extended above that on the top side, which I don't think we've been there above today, we have not. When we're above the top side, we expect a rejection. One of the reasons that breakout traders fail is because breakout traders want to sell the bottoms, and at times they work. Okay? At times they work. But they want to sell these bottoms around these 95 areas, right? So they want to go short in here. You get some ticks, but ultimately it bounces hard against you. Hang on one second. Sorry, guys. In any event, fellas, that is what we look for. We look for breaks, support, support, resistance, resistance. All we're doing is trading from station to station. Now, if I get rid of the order flow, it's much easier to see. I'm going to use gold because it's got a simpler. So look, disregard the white. These are actually VWAP with 1, 2, and 3 standard deviations. Similar but not the same as our order flow. Okay? When we trade below VWAP, when we break below VWAP, here, what do we expect? We expect a move into our 68%. Okay? That's a target. If that doesn't hold, we expect a move into 95%. Now, again, the order flow does not reflect a third standard deviation, okay, which is extremely, if you guys don't have this indicator on a regular chart, you should email me for it. 3 standard deviations represents extreme oversold and extreme overbought conditions. We generally will bounce unless it's a complete breakout, news related, something like that. Short of that, we generally pull back off the top and bounce off the bottom. Okay? So again, without getting into, well, you know, if I sell VWAP and I get to 1 standard deviation, how do I know it's not going to bounce back up and take me out? And where's my stop? We're going to cover all of that, guys. What I'm trying to do is lay the framework at this point merely for where we trade from and where we trade to. Okay? Where we trade from and where we trade to. Primarily, we're trading these 5 areas, and to a lesser degree, the 6th area, which is your volume point of control. I'm mostly interested in, when I'm looking at order flow, where am I? For instance, here's gold, right? Let me take a look at gold. Let me get it. Okay, so here's gold. What do I see? I see a failure below this 68. Well, I'm betting if I were to take a trade, I got an unfinished auction here, we at least trade down to 60, I would think. And then possibly into VWAP. Okay? So that is the presumptive move at this point. Now, there are some mitigating things here. That unfinished auction, which we just took out. So it's a capped candle on the top. But I do have a negative delta. I am above VWAP. But there's an unfinished auction down here at 59.7 that this should want to come and get. Remember, we talked about this stuff earlier. This is all overhead resistance, lower highs, right? Every one of those blue lines represents a lower high, including here, this most recent candle. We expect this area to be resistance. Now, I expect gold to go longs overall, but again, this 60 to 65 area up to here, 64, is a lot of resistance. But nonetheless, the presumptive trade is down into VWAP. I'm having a heck of a time seeing these stupid, any of it. I'll leave the arrows. Okay? So we trade basically these areas. That's all we're looking for in VWAP. What station am I at and what direction am I trading? From up in these areas here, we're looking for a rejection back down. And from down in here, we're looking for rejections back up. So again, you can see it. I don't know when we've been to that, if at all, that 95. I don't see any price that's gone up to the 95 today. Here, whatever this is, 455 this morning. We went right up to the day high, 4 contracts traded there, and we came right back down into the 68. That's it. We moved up. We moved up from VWAP. If you look at this 350 candle, we moved up from VWAP. First target. And then we would expect above the 68 to move into the 95. The 95 and the day higher at the same place. Okay? So we get our targets, guys. And then from here, we break out a little bit, but we start looking for failures. These are areas we kind of want to sell, not buy. Trend's got nothing to do with it. Okay, we start looking for shorts in here. Back into here. Remember how price moves. See what I said? The presumptive trade is at least down here to 60 from 61.7 and more than likely back to 59. At least to this unfinished auction at 59.7. Okay? This is the current candle. If we were to take this trade, and again, I'm not going to get into actual trades yet, but if we would have taken this trade, our stop would have to be above that swing. There's an auction down here for it to come get at 59.7. There's support for it here at 60.5, just based on the 5-minute candle, 60.6. Right? Your support comes in here, right in there. But again, the presumption is we're putting in lower highs, lower lows. We're going to break down through this and come get this. And at least I would guess back into VWAP, and it's going to try to reload again. Now, if I had, again, we're not going to get into specifics yet, but if I had a positive delta instead of a negative delta, I would probably be looking for the break above this candle back up into the highs. Right now, I have no reason to want to be long gold. Not to say that they can't, next candle, 500 buyers can't come in, but these are pretty small ranges to try to trade here. But that's essentially what we're looking for. Those 6 areas, or 5 areas really. Point of control, generally if we're above point of control, we're trading longs. If we're below point of control, we're looking for shorts. But conceptually, the blueprint I want you to see and understand is, where am I and where am I trading to? Am I trading from somewhere or to somewhere? Right? So if we move out to 64, I got to start thinking what? Well, first thing I want to do is look at my delta, which I'll teach you guys. If I trade up into here, I got to be thinking to move back down into there. Remember how price moves, right? You get a down, we get an up. Nothing moves in a straight line. We get another down move. And now we have an up move. Get an up move. Although we have higher highs, but again, we'll get into this stuff later. And then I get this down move. Now I've got this small up move again. Range is getting really narrow. This could come here. But that's how price moves, back and forth, back and forth, back and forth. Right? Nothing goes straight up or straight down. Does anybody have any questions on these 6 areas, guys? Any questions? Okay. Again, all I want you to see, I wish there was a way to do a chart without. Oh, I bet there is. Hang on. I bet I can do this. Yeah, I'll leave the wicks. The heck with it. Daily VWAP. Okay. So the candles are gone. Now you can see it without the candles. Okay. This is it without the candles. So all we're doing is we're trading from somewhere to somewhere. That's it. Home base, first, second base. Now again, the order flow doesn't have third standard deviation, which would be basically way overbought, way oversold. We're generally going to bounce. Does anybody have any questions on this? It's fairly simple concept. Any questions on this, guys? Again, we're going to go easy and slow with all this stuff, and then we'll start tying it all in. It's not about guessing. I don't guess at anything. I don't guess. At some point, again, I'll be teaching you guys the specific of how to read a candle and what to look at in a candle, where to put stops, etc., depending on if you're long or short. All I want you to understand is the concept. You guys get the concept. Is there anybody that doesn't quite get this concept? Is there anybody in here that does not get this concept? That we are always trading from station to station to station to station to station, either up or down. Okay, everybody's got this. It's pretty simple. Where we start getting into the nuts and bolts of this thing is, how do I know where to enter a trade, when to enter a trade, and what to do with the trade? Okay, see, I was wrong here, but we left an unfinished auction. We'll come back and get this at some point. Gold is breaking out and the NASDAQ's breaking down again. Be that as it may, right? Where would we ideally want to have been long anyways? Down here. Okay, first of all, I get the break below VWAP to the 68 to the 95. We break down to the 95, not quite to the low of the day at 10 o'clock. My long comes in when I cross back through this 95 and I get this first little imbalance. Okay, I'm not going to get into trading candles yet. but this is where I'd be long, right here. And this is where your stop is. I look for stacked imbalances to hide. I could have hidden my stop right there. So I could have been long 54.5 and my stop somewhere down around 20 ticks, 52.5. Trade into VWAP. We get our VWAP from down here, 54.5. We presume we're going back to there. Now I got to start trailing. And I'll teach you guys how to trail. And if we trailed this correctly, we're going to follow these stacked imbalances all the way up. We get taken out, but Eduardo, I want to thank you for your constant questions. But I'm going to once again state I am taking this in a very slow and methodical way. I want you guys to understand the concept. Next week, we'll start to address actual trades and how to identify them in candlesticks. I just want you to understand the concept. Okay? This is now your blueprint. Is everybody clear? It's a very simple lesson, but this is the foundation for what we do now. Starting next week, we will start looking at candles and how do we make decisions in candles. Okay? All right, fellas, have a great weekend. I will see you all on Monday. If anybody needs me, feel free to send me